Hello, my name is Timothy Lee Rogers Sr., aka Aranya Gunde. That's Big Spot if you don't hablo español, and I am super excited to announce the Art of Reading Price Section 30-day boot camp. Now I know you may be wondering, well, Tim, we just had the Art of Reading Price Section mentorship. What's the difference between the mentorship and the boot camp? Well, unlike the mentorship, this is a month-long boot camp for up to 20 people where I will be dedicating the entire month of January to share my understanding of the ICT concepts and how to use them on a day-to-day basis. Not only will I just be sharing my understanding of the ICT concepts, but once you're inside the private Discord, you'll have access to weekly Q&As, you'll have access to weekly homework reviews, you'll have access to at least 14 tape reading sessions, and you'll have access to the private Discord for up to 6 months after the boot camp ends. And at the end of the boot camp, each individual that's inside the boot camp will have an opportunity to schedule and conduct a 1-hour one-on-one coaching session with myself. Now, the boot camp will be broke down into 4 phases. Phase 1 will be a revamp of the Art of Reading Price Section educational material. Phase 2 will begin our tape reading sessions, and phase 3 we will move into developing strategies for those that are unable to develop their own strategy. I will work with you to come up with a strategy that fits your trader identity or your trading style. And phase 4 will be a combination of tape reading, Q&As, and we will start to schedule the one-on-one coaching sessions for everyone involved. Now, let's get to the meat and potatoes. How much does it cost? Well, the Art of Reading Price Action Boot Camp will go on sale beginning December 1st, 2024 for the price of $1,000. But if you are a current member of the gang, you have a special discount code inside the Discord right now, which you can use up until December 20th. Since folk can hear everything I'm saying already, I'll go ahead and stop that. I don't even have everything turned on. What's missing? Okay. What does that look like that? Oh, this is turned down. That's why that looked like that. That was turned down. I'm like, well, why does that look like that? Y'all see them all over the place, man. What's going on, man? Good morning, everybody. Y'all know what today is. Today Friday, man. Today Friday. What do we call Don't Force It Friday? You hear me? This is Don't Force It. Every Friday is Don't Force It Friday. You know what I'm saying? I must say, right? I must say the fourth quarter has been good, right? The fourth quarter has been good. And sticking with this Don't Force It Friday has been a good thing for me, right? I didn't hit this. I could have swore I hit that. Y'all just popping up because y'all know to pop up, I guess. I could have swore I sent out the bat signal. Hey, before we get into it, man, allow me to say good morning to everybody that's pulling up. If you in the gang, hanging out in the Discord, if you on the tube, and are they still letting me? Yeah, they still letting me stream on the Talk of the Ticks. If you're on any of the platforms that I just mentioned, welcome, man. Welcome. Drop something in the chat, or rather tat, so that I can see who's here. As y'all know, well, first of all, let me back up. If you don't know who I am, my name is Timothy Lee Rogers Sr. We're going to start all back over. Boom. Good morning. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, let me get my headphones so if somebody in the gang want to talk to me, it won't be echoing in y'all ears. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Gunde. That's Big Spot if you don't hablo español. And you are now in tune to, if I get my picture up, I don't have my picture up. So I got to get my picture up because if y'all don't know, I've been I've been playing Super Dad this morning, and I ain't played Super Dad in a long time. Tape reading session. This is tape reading with Timmy. You feel me? Hey, man. We getting close to time for the boot camp. What boot camp you talking about, Tim? I'm talking about this boot camp right here, right? We getting close to time for the boot camp, man. Right? We starting on January 1st. Right? We're going through the whole month of January. All right? If you're curious as to what the boot camp is, right? It's just me sitting down with you and going through, sharing how I utilize the ICT concepts. We go through a teaching phase, in case you're not familiar with it, and then we go into tape reading, and then we go into helping build entry models, and then we start to schedule the one-on-one video conferences with myself so that we can sit down and hash out and fine-tune anything you need to fine-tune. That's the boot camp. If you want to know what the experience is going to be like, I have been showing you over the last couple weeks. Yes, it's January 1st through January 31st, Monday through Friday, right? All right, so looking at the calendar, January 1st is on a Wednesday. All right, January 1st is on a Wednesday. So it's January 1st through the 31st, and it's Monday through Friday. All right, so you got them 3 days, those 5 days, those 5 days, those 5 days, those 5 days there. All right, in the beginning, God said, let there be light. In the beginning, it's going to be the educational part. What we're going to be doing, we're going to be revamping the art of reading price action, right? But instead of you looking at pre-recorded videos of the education material, it's going to be me live going through the slides, right? And then you can sit there one-on-one with me and ask questions after the lesson is done. And then we're going to move into the tape reading. Now, the educational portion is I've decided it's going to be in the evenings, right? I'm just going to put a poll in there to see, get a feel for what's the best time for the people, because I feel like most people can't make it to morning sessions, right? So it's going to be in the evenings, and I'm just going to figure out, I'm going to put a feeler out there for what's the best time for the group collectively, right? You can't please everybody, but it's going to be in the evenings. The tape reading is going to be in the mornings, right? Because that's when I watch price, right? That's when I trade. That's when I watch price. So the tape readings are going to be in the morning. Gang. Christmas, the 75% off code ends on Christmas. Christmas up until Christmas, 75% off ends. Non-gang members, the 50% off is over. There's no more 50% off, right? Non-gang members, it's $1,000 now. Gang members up until Christmas with the 75% off code is $250. I have been showing you, right? If you think back over the last couple weeks, I've been going live, right, and showing you what the boot camp would be like. If you've been watching our price action recap videos, right, that's what the boot camp would be like. I can't be anything but me, I can't be anything but me. That's what the boot camp gonna be like. We're gonna walk through price, and we're not gonna feel anything. We're not gonna guess anything. We're gonna let price show us what it wants to do. We're gonna train our mind. We're gonna condition our mind. That's what you do in boot camp. Like, I'm a veteran. I'm a U.S. Army veteran. When you go to boot camp, right? When you go to boot camp, they condition your mind to act in certain situations. They condition you. They drill it in you over and over and over so you act, right, as second nature. That's what we're going to do in the boot camp, right? You're going to act. It's going to be second nature for you, right? It's going to be second nature for you. So check it out. If you're interested, I didn't put the link in the top of the chat. I didn't put my link in. Let me put the link in the top of the chat. And I know I said I wasn't going to say this no more, but if it was me and I wasn't in the gang, and I wanted to, hold on, let me go get this link first. Y'all know I can't walk and chew gum at the same time. I should have put this link somewhere where I can go get it quick. But what I have to do, I got to go to a video. I have to go to a video and copy the link out of the description. Has anybody seen that Busta Rhymes Walmart commercial? I promise you, like, I can't understand nothing he's saying. So it's like, I think that commercial is so trash. Because I don't know if it's just like how it's coming through on my TV, but I can't understand anything he's saying. And I'm like, now, I could understand what Busta Rhymes be saying. You're welcome. And thank you to all the veterans out there also. Thank you for your service. I appreciate that. I appreciate that. All right. All right. Now let me pin. I'm gonna pin that to. I just put the link in the chat. If you want to partake in the boot camp, the link is in the chat. Again, gang. There's 10 slots left. We have 10 slots left. Gang. You have until Christmas to take advantage of the 75% off. It's in the announcements channel. If you're not in the gang, right? So that'll be $250 for gang members. If you're not in the gang, the price is now $1,000. The 50% off sale, it has ended. It ended on the 14th. If you want to participate, if it was me, right? There's a join button somewhere around here, right? If you join, right, you go in to hit join. Say you want to join as a Black Spider. Don't go in there joining as a silver member, right? Because I had people do that to me. Hey, how do you get in your Discord? And then they come in there, they join as a silver member. And I tell everybody, if you join as a silver member, right, you just want to buy me a cup of coffee, right? I don't do a whole lot of interactions in the Discord with the silver members. The silver members, you're just a step above, like, public, right? You're just a step above public. Right, so they try to come in on the silver member and come in there want me to, do all kind of. I tell people, it's tiers to this, right? But come in and join as a Black Spider member, and when you're in there, you'll see the announcements channel. You can get that old 75% off code, right? So instead of paying $1,000 plus tax, you can pay $7.99 to be in the Discord. It's $7.99 a month, $7.99 a month, right? You can get that code, then you can go use that code to get it for $250, right? And you can save that extra money and go buy yourself a nice Christmas gift. Now, why are we here? We are here to talk about price action, right? Let's pull up the charts. And while we pull up the charts, we want to talk, man. It's Don't Force It Friday, right? Oh, I forgot to shout out who was in here. Who's in here, man? Y'all drop something in the chat. I'm about to shout y'all out right now. All right, I'm about to shout y'all out right now. Is that big enough? Can y'all see that? What's going on? Let me see who in the Discord. We got A Barbara in the Discord. We got Deborah in the Discord. We got Lil Hawk in the Discord. We got Jim in the Discord. We got Lorraine in the Discord. We got Martin FX. Oh, I know who that is. I was gonna say I don't know that name. I know who that is. We got them in the Discord. We got D in the Discord. We got G is Silent in the Discord. We got Kashaya over there on the tube. We got Here to Learn and Share over there on the tube. We got AR Coolin over there on the tube. We got Kim on the tube. We got Heinz C on the tube. What's up, Heinz? What's up, Heinz? What's going on? Heinz, I ain't seen you in a month of Sundays, man. I ain't seen you in a month of Sundays, Heinz. Hey, it's Don't Force It Friday, man. You know why we call it Don't Force It Friday? Because if you had a good week, don't force it on Friday. Don't give nothing back on Friday. If you had a bad week, don't force it on Friday. What's up, Sanjay? Don't force it on Friday. It ain't nothing worse than having ending a bad week worse. Going into the weekend having to think about it. Don't force it on Friday. You know what I'm saying? If you ain't take no trades, don't force it on Friday. Don't force it on Friday at all. Relax. Just let it roll like the dog. You know, Bad Boys. What's up, Marco? You know, Bad Boys with Martin winning there. Bad Boys for Life with Martin winning there. He like, them dogs fresh. Them dogs fresh. Let me get them right there. Just let it roll like the dog. Just let it roll like the dog, baby. Kick Batowski. I got that from Kick Batowski. Hey, but it said just let it roll like the dog, baby. Just chill. Just chill. You know what I'm saying? Don't force it Friday. Now, can anybody tell me what today is as far as, you know what I'm saying, something big is happening right now with futures, with options, with futures on options on futures. Can somebody tell me what today is? Do you know what today is?
Options expiration.
Yes, it's the witching period. It's the witching period, baby. It's when all of them expire at the same time. You got futures contracts expiring. You got options contracts expiring. You got options on futures contracts expiring. And then it's something else that's expired. I know, because I know 3 of them, of the triple witching. But it's something that expires too that make it a quad witch. But I don't never remember what that quad is. You know what I'm saying? But it's the quarterly ones. That's it. The quarterly. I just remembered it. So you got the quarterly expirations happening, right? You got the monthly expirations happening, and those monthly expirations are the options, the futures, and the options on the futures, right? Those are the monthly ones. And then you got quarterly contracts expiring at the same time, right? So there's your quad. It's really triple still, but they want it to be special with the quarterlies expiring at the same time with the monthlies. So you got the monthlies and the quarterlies. Yeah. Anyway, so this is like, don't force anything today. Don't force anything this week, because when you have expirations, right? When a contract expires, right? What does that mean? That means that you have to get out of this position, right? So if you have to close that position, what does that mean? That means that now you have to decide, do you want to go into another position, right? So if you're going to close a position and you're going to open a position, right? What does that mean? When you close a position, you're taking money out. When you open a position, you're putting money back in. So what happens? What do you think that causes? Can somebody tell me, what do you think that causes? Gang. Somebody unmute and tell me, or somebody type in the chat, what do you think that causes? Right? I'm giving you a clue. There you go, here to learn and share. Volatility. Shout out here to learn and share, pulling up with the hard-hitting answers. Right? Creates volatility because the contracts are expiring. You have to, opportunity, you feel me? Father Legend said opportunity. Shout out Father Legends, right? What's up, Jennifer? Right? So you got money coming out and you got money coming in. So it's a lot of volatility, right? It's a lot of volatility. And what does volatility usually do to us day traders, right? Y'all know what that was right there? Y'all know what that is? Who can tell me what that is? What is that?
Was it a slap?
Slapped up all side the head. We typically get slapped around, right? We typically get slapped around. So, again, that leads us back to don't force it on Friday. Now, Tim, why are you saying all of this, right? Why are you saying all of this? I'm saying all of this because when it comes to trading, right, the ICT concepts are the best thing that I've ever seen. Why is that? Because it gives me something to look, it gives me these signatures to look for that I, with a great degree of accuracy, can enter and exit the market with confirmed, backed up, verified data. And these signatures happen over and over and over and over. So I don't have to guess about when I want to engage. All I got to do is not chase, right? Get my analysis correct, meaning be in line with the algorithm, and I can pick and choose when I want to participate. And then when I understand that I'm in an environment like a quad witch, right? A FOMC announcement, a CPI, a GDP coming up. You know what I'm saying? All of this stuff that this is macro economics that the algorithm uses to manipulate how it wants to move price around, right? I could care less about what's happening or being said at any of these, and it's not just these, I'm just picking these. I could care less about what they say at an FOMC Fed rate announcement. I could care less about these contracts expiring and if we want to go into a new one or did. I could care less. I could care less about what the CDP numbers are, CPI numbers are. I could care less about what the GDP numbers are. I could care less. Right? All I need to know is, when is this happening? When I know when that's happening, I know when to be cautious and not get into anything. I know when to sit back and wait for that to happen. Wait for that to happen. Wait for that to happen. And when it happens, right, get some type of sign from the market of what it wants to do, and then look for signatures that say, okay, Tim, it's okay for you to engage now. All right? So many times we want to know the secret to, hey, how do you do it? What's this? There's no secret, right? There's no secret to anything. There is no, where is he? Where is he? Where did he go? Where did he go? Where did it go? What y'all do with my crystal ball? What y'all do with my crystal ball? Y'all know how I get. Y'all know how I get. Oh my goodness. Now I just had, y'all know how I get. I can't do it until I find it now. I'm going crazy. I'm not going to stop until I find this. If you don't like it, leave. I don't care. Where is mine? This is how I feel right now. I feel like this right now. I'm going to put that up there, right? Because that's how I feel. I'm going to put that there until I find this. You know, and then when I find it this time, I'm going to put it. Now, I know look at that. You see that right there? It's right there. I was typing it last time. There's no crystal ball. There's no crystal ball that is going to just, you know what I'm saying, make you just know what the, yes, it is. The market is open, the market is open, the market is open. I appreciate that, Father Legends. The market is open, the market is open, the market is open. If you're going to trade, please trade safe. If you're not going to trade, please take copious amounts of notes so you can go back and study what you saw today and apply to your future trading endeavors. Enjoy your day. Now, all right, if you all know, if you've been hanging out with us, right, for the last few weeks, from like the beginning of December, right, from the beginning of December, I've been going live, right, and during the price action recap, the intraday price action recap, we've been doing way more than just recapping the price, right? All right, we've been doing way more than recapping the price. We've been drilling it in your head what's important when it comes to reading price action. That's why I say if you've been around for the last couple weeks, right? You've got an idea. You've seen what the boot camp will be like, right? You're going to use your brain, right? You got to understand the concepts and you got to use your brain. Now, if you've been around since price was right here, right? Since price was right here, if you've been around since price was right there, can somebody in the gang tell me, right? Because remember we said the overall trend was bullish, right? We said the overall trend was bullish. And we said if you don't have the skills to trade against the grain when the overall trend is bullish, you should just sit on the sideline and wait until the market gives you a reason to buy, right? But we said since we were right over here, right? And it's just the recent time, right? Since like I'm just going back just a little bit, right? Right over here. When we got right up here, right? And we made this move there, what did we said that was possibly what? Right? Gang. Somebody unmute and tell me. We said that was possibly what? Right there where I got my arrow drawn. Don't worry, it ain't got to be big. You ain't got to see all the details. Right? All right. Good job. Good job in the chat. But I want somebody to talk to me. Good shout out. I'm just going to say Marty. Shout out Marty and shout out Kashaya. But I want somebody to talk to me. Speak, Lord. Speak to me. Speak. Why y'all ain't tell me I ain't had my hair light on? Why y'all ain't tell me my hair wasn't looking fly? Ain't nobody gonna talk to me? Everybody got the hush mouth today? Are y'all trying to hurt my feelings? Y'all trying to embarrass me out here in these algo internet streets? Y'all trying to hurt my feelings? Y'all know how I get now. Y'all know I'm a grumpy old man. Y'all know I'm a grumpy old man. I'm not sharing my screen. We cannot see that on YouTube. What y'all can't see on y'all can't see my screen on YouTube? Y'all can't see my screen on YouTube? Nobody still ain't said nothing to me.
What you need, Tim?
I said
smart money reversal.
Money reversal. That's
okay. Okay. I was about to share that down. Y'all got me. Y'all got me out here looking bad out here in these algo in their streets. If you have a light on. Oh. Y'all can't see. Let me go back to full camera. Y'all see that right there? You see that glow on my head? Now watch when I turn this off. See that? Glorious. 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 Y'all can see that. Oh, the light just fell on me. The light just fell on me. If I wasn't working for myself, I'd sue. All right. So now we said that this was a possible smart money reversal, right? And so at that time, right? At that time, we said if you possess the skills to trade against the grain, right? Once we get confirmation that this was the smart money reversal, right? Where would that put us? Right? Once we got confirmation, we're not just guessing, because when we were here, right? And when I say here, let's come here like that, just like that. When price looked like this, right? Because when all the candles are on there, right? For people who haven't walked this journey with us, it's difficult for them to understand in their mind that we said this back then because they wasn't here to see it. And so it seems a little cherry picked and a little, you know what I'm saying? A little scammy, right? So when price was here, okay? When price was there, we said, hey, this is a possible smart money reversal, right? What made us say that, right? What made us gang? Come on, step it up. Gang. What made us say that this was a possible smart money reversal, right? And it has to do with this right here. What made us say that? I'm giving you a clue. Come on.
It took out that last accumulation.
Booyah! Y'all give it up for D, man. D pulling up with the hard hitting answers, right? Signatures, right? We're looking for signatures. We're not just assuming this stuff. So when you have, when in price, everything hinges on the other concepts, right? So there's a concept that's called a market maker model, right? And in the market maker model, you got levels of accumulation and distribution, right? And one signature that a market maker model reveals to you is that once you've taken out a certain level of liquidity, what level of liquidity, Tim? Who freaking cares? Once it's taken out a level of liquidity, right? It will give you a signature where when price trades below the last area of accumulation in a market maker sell model, right? Or the last area of distribution in a market maker buy model, right? Then, God dog it, get back over here, Tim. Then we can assume at that point, we're assuming that right there was the smart money reversal. Why do we call it a smart money reversal? Because where does the smart money sell? Right? The smart money sells above what? Smart money sells above what? Smart money sells above what?
Relative equal highs.
Highs. They ain't gotta be relative. Smart money sells above highs and they buy below lows. Right? We've been conditioned, right, to think retail minded, where you say, oh, if we break out above this, that means the market is bullish, so we want to buy above highs. Right? But if you buy above a high, think about it like this. When you walk into Walmart, right? And this is the highest a pack of potato chips has ever sold on this day, right? When the price goes above that, do you want to buy it for more than it's ever sold before? Or do you want to wait for them to put it on sale and buy it at a discount, right? The stock market is the only place that we have been tricked into thinking I need to buy it when it gets more expensive. And I need to sell it when it gets cheaper. No. You want to sell it when it gets more expensive and buy it when it gets cheaper. Right? So smart money sells above highs. Right? So when we reach a certain level of liquidity predetermined by the algorithm, the smart money reversal will occur above some highs. Okay? And then once we break down below the last area of accumulation, right, then we can assume that was the smart money reversal. But we don't have our confirmation that that's the smart money reversal yet, because right now, right, this area here, what is happening right here? What's happening right there? Outside of the fact that it's consolidating, right? Outside of the fact that it's consolidating, what's happening right here? What's happening?
I want to say engineering liquidity.
Yes, engineering liquidity. All right, Father Legends, hold it down. Father Legend got to go to work. Peace out. Right? Engineering liquidity. Shout out Lump with the sleeping voice. He sound like he ain't even walked Dutchess yet this morning. All right. So we haven't had confirmation yet, and we know that the smart algorithm is just engineering liquidity, right? We don't want to become that liquidity. Okay? Let's put a little bit more meat on the bone. Right? We put a little bit more meat on the bone. All right, so now we see here, right? We see here, we're starting to get some information over here, right? What information are we getting, right? We have taken out the last area of accumulation, right? We've traded back up, right, into this imbalance. Look at the bodies of these candles. Right? The bodies tell the stories and the wicks do the damage, right? The bodies of them candles are respecting this imbalance right here, right? is respecting that inversion fair value gap right there, right? This wick trades up into that rejection block right there. This wick right here comes up and creates an equal high with that over there. That's 22,425 and a half, and that's 22,425 and a half. Creates an equal high right there, right? So what does that mean? We haven't taken out that high after breaking below this last area of accumulation. That high is being protected. What do? We displace away, right? When we displace away, see that imbalance right there, right? Let's draw that imbalance out. Right, we're drawing that imbalance out right there. We're gonna make it red. Tim, what time frame are you on? It don't matter. Price is fractal, right? Price is fractal. Okay. So we respect this inversion fair value gap over there, right? After we come down, and is there a? Yep, there is. There's a volume imbalance in there. Right, so trade below that, like we said, come back up, respect the inversion fair value gap, right? We respect the inversion fair value gap there. The inversion fair value gap is a type of what? The inversion fair value gap is a type of what? The inversion fair value gap is a type of what?
Change in state of delivery.
Change in the state of delivery. Very good. Right? So now we have us right there. Okay. Right, so we say the inversion fair value gap is a type of change in the state of delivery, right? When we create our first order block, that is our change in the state of delivery right there. That is the change in the state of delivery right there, right? Because the order block, right, is the one that's responsible for the change in the state of delivery, right? Price was going up. It was bullish, right? Price was bullish, okay? Once we create a bearish order block, right? The order block's job is to block price, right? So that is the change in the state of delivery right there, right? So at this point, once we trade below there, right, this is what's letting us know that that's probably the smart money reversal, right? When we come back and we respect that high right there, right, and then we displace away, creating that imbalance right there, now, right, this is our confirmation that that was the smart money reversal, right? Why is that? Because we broke below this area, we traded back up and dropped down there. This here, this displacement away, let us know, Tim, what if there's no fair value gap there? If you get an immediate rebalance there, that's even better, right? If you get immediate rebalance there, that's even better, because now that this has happened, right? We now know that that's the smart money reversal, because we now know that that is what? What is that? We know that this is the smart money reversal because we know that this is what? Low risk sale. Shout out Marty. Shout out here to learn and share. That's a low risk sell right there. Right?
I thought they called that inside liquidity.
It is internal liquidity, but
I mean, internal, okay.
In the sense of a market maker model, that's the low risk sale. Stacks on stacks on stacks.
Okay.
Like low risk sale. That's what you're just gonna put LRS right there. Right? That's our low risk sale. Right? That's our low risk sale right there. And once we get our low risk sale, right? Once we get our low risk sale, now we know that's the smart money reversal, right? We got our low risk sale. Why do we know that's the low risk sale? Because we did not take out that high, right? And then we displaced down, right? We got our change in the state of delivery, right? We traded back up into the inversion fair value gap, which is a type of change in the state of delivery. Excuse me. Right? We respect the inversion fair value gap. We respect the high. Then we displace away. Right? What happens when smart money tips at hand? We get displacement. Right? The market expands with authority, leaving imbalances behind. We get displacement. Now that we know that that's the low risk sell, where are we in price? Since we know that that's the low,
right side.
We on the right side of a market maker sell model. Shout out D, pulling up with the hard hitting answers. Right? We on the right side of a market maker sell model. Right? And back, if you remember, right? If you was tuned in at this point here, we said this is when you can use your knowledge and expertise to trade against the grain, because the price is bullish. We're in a bull market. We're in a bull trend, and the monthly, weekly, all of the higher time frames are bullish, right? All the higher time frames are bullish. And if you're bullish, right, you want to buy. Where do you want to buy it? Right? Where do you want to buy it? You want to buy in a premium or a discount? What do we say about that when you walk into Walmart and then chips treetop tall? You want to wait for it to go on sale so you can buy where?
In a discount.
In a discount, right? Shout out Shonister, shout out Kashaya, shout out Lump, pulling up with the hard hitting answers. Shout out Here to Learn and Share, pulling up with the hard hitting answers, right? You want to buy, shout out Seawalk, you want to buy in a discount. So if you want to buy in a discount, you're anticipating a retracement, right? Because we're above highs. So you're anticipating a retracement. If you're anticipating a retracement and you see a signature that's a smart money reversal, that's a low risk sell, a low risk short, however you want to call it, now you know you're on the right side of a market maker sell model, right? And if you're on the right side of a market maker sell model, right, what will be your overall target when you're on the right side of a market maker sell model? What are you looking to target?
Initial consolidation.
You're targeting the liquidity below the initial consolidation. Can anybody tell me why that is? Why are you targeting that initial, the liquidity below that initial consolidation? Why are you targeting that? Right? Not equal lows. We're thinking in the purpose. We're thinking about the purpose of a market maker model. Think about it now. It's the market maker's model. What's the purpose of the market maker model? Stacks on stacks. Stacks on stacks. What's the purpose of the generating liquidity? Very good. Right? So, think about it. If it's an initial consolidation, right? That means at some point in the past, the algorithm engineered some liquidity, right? It let a whole bunch of liquidity build up on the top and the bottom here. And then it manipulates up, because the market is a manipulative thing. It manipulates up. And if it manipulates up and you get a smart money reversal, where did it leave a whole bunch of liquidity that it can go and get? It's going to be at a place that it remembers. And that's going to be that initial consolidation. So that's why you want to target that initial consolidation, because the algorithm left a lot of liquidity there to go back and visit in the future. Right? And it remembers, like Here to Learn and Share says, where it started. Well, Tim, which level of liquidity should I target? What time frame? Whatever time frame you want. Price is fractal. It's fractal. When it gets to the end of my market maker sell model, doesn't mean it's the end of your market maker sell model or the algorithm's market maker sell model. But you just look for clues and signatures to let you know, does it still want to keep going? Right? So, Tim, how can I pick a good initial consolidation? Well, let's talk about that for a second. Looking at clues again, right? On this Don't Force It Friday. All right, we're looking at clues again. They got this thing called dealing ranges, right? This is a dealing range. Tim, what makes a dealing range? When the algorithm takes out liquidity on the sell side, and then it takes out liquidity on the buy side, that gives you a dealing range, right? So from this low, right, to that high, that's the start of this dealing range right there, right? Now, when you come down here to this point there, you're not sweeping out any liquidity on this time frame, right? So from this low to that high right there, yes, that's a range, but that's just a price leg. That's not a dealing range, right? On this time frame, that's not a dealing range on this time frame. So guess what? This dealing range just expanded up, right? When you come down here, right, you're taking out liquidity right there. So this is a dealing range. But when you look to the left, this little dealing range is inside this dealing range. So that dealing range just expanded to there. This dealing range is still going, right? When you come from this low to that high right there, right? Come here from this low to that high. I'm sorry. So from this low to that high right there, right? This is a dealing range, but this dealing range is inside this one, right? So this just expanded again, right? So now you got a dealing range here that's inside this dealing range. You got this little dealing range there that's inside here. And then you got this price leg right here that's inside here, right? So this right there, that is your complete deal. This is the last dealing range that the algorithm is in on a higher time frame, right? Because this is the lowest low to the highest high, right? In this entire price leg right there, right? So this is your last dealing range right there, right? And then if you look here at this last dealing range right there, what do we have here? We have a big area of consolidation right there. That is a lovely target for you to target, right? At the bottom of the dealing range, right? Now, when you zoom out and look at it on a higher time frame scale, right? Then you notice, okay, even further down, right? Even further down, we got another area of consolidation right there, right? And if we look here, we took out liquidity there, right? Never took that low out again. So this dealing range here that we're looking at is inside that dealing range right there, right? So now this low right there is just internal liquidity for this entire dealing range there, right? So since this low right there, we know that that low right there is just internal liquidity for a larger time frame, right? Now this makes that, what does that make that? Does that make that a high probability or low probability target when you realize I'm on the right side of a market maker sell model? Does that make that a high probability target, knowing that it's internal liquidity for this entire dealing range there? Shout out Shonister, man. It makes it a high probability target, right? Why does it make it a high probability target? Because anytime that the market expands, right, you want to see a retracement back to at least equilibrium, right? Why? Because you want to see price come back to a fair value, right? Equilibrium is a fair value, right? It's not too expensive. It's not too cheap. It's a fair value, right? So when you look and you see that you got internal liquidity, right? You got internal liquidity that's inside the range. We're going to go from here, right? We'll go from that low up to that high right there, the highest high, right? For this dealing range right there that we pointed out, right? For this dealing range, that low sits in a slight discount, right? So with your knowledge of looking at signatures, you can now look for reasons to get short at a minimum to that level right there, right? At a minimum to that level right there. Now, for everybody that's been in tune forever, and at least since price was right here, now you know why myself and the gang have been looking for reasons to sell since price was over here. Is anybody confused on why we were looking for reasons to sell since price was over here? If you're confused, put a 1 in the chat or say, Tim, I'm still confused. And we will spend a little time with it. Right? Matter of fact, I got to pee. So y'all put it in the chat if you're confused, and I'm going to be right back. I'm 52 and my bladder weak. If you got an issue with it, somebody show them where to know it. I don't see nothing in the chat, so I guess there ain't nobody confused. I don't see.
Can you confirm for me when you first start to think that is going on the right hand side? Is it when it hits the peak at the SMR at the top?
No, it's when you break below that when you break below or above the last area of accumulation or distribution, right?
Okay, when you go through there
When we
before.
came
Okay.
up here and we made that high, then we came back down there, right? This right here, this little area, because if you look here, it's just like a little area of consolidation there, right? So once we get this displacement down right there, right, we're looking at this as the change in state delivery, right? Because that's a bearish order block right there. Okay. So you got a bearish order block there. And since you got the bearish order block there, right, we know that our change in state delivery starts at the order block. And what makes it an order block is that we got this displacement down and traded down past these last up close candles there, right? We got a little area of consolidation there, and we leave with that displacement, meaning expansion with a fair value gap there. That gives you a displacement, right? The last up close or series of up close candles at or near equilibrium of this consolidation, that's your bearish order block, right? That's one way to get an order block, right? Your other way to get an order block right here, like this bearish order block there, right, is to come up to an area of anticipated resistance, right, which is this area here. We got an inversion fair value gap. We got a bearish order block. So you're coming up to an area of anticipated resistance, and then we displace away, right? When you go past that opening price there, now that gives you your bearish order block. That's the two ways you can get an order block, and just flip it over for bullish. Same thing. Like, so when you're looking at it on the bullish side, right, it just looks like that, right? Don't worry about the candles out of the other colors, right? Because here, right, we're looking at, right, we come up to an area of anticipated resistance, and we displace away, right? That gives us our order block there. And if you flip it over, right, you just come down to an area of support and displace away, and that give you your bullish order block, but it'll be down close candles. I'm just flipping the chart over. It'll be down close candles there, right?
Yeah, gotcha.
Okay, and so once we get out of here, once we trade below this area here of accumulation, right, we get that break there, and then we come here, respect that high, and displace away. Now we know that it was the smart money reversal, because this is the low risk sale, because now the algorithm has displaced away, created a change in the state of delivery, respected all of the signatures it left behind. This inversion fair, you won't have all of them every time, but it left you with an inversion fair value gap, right? That's the type of change in state of delivery. It left you with a bearish order block, right? And we got a rejection block up here. So we trade up into the rejection block, right? We're respecting consequent encroachment of the inversion fair value gap, and then we displace away, right there. Now we know that was the low risk short. Once you get the low risk short, right, that displacing away, once you get the low risk short, now you know that this was the smart money reversal, because now you got the low risk short, and now you know that you're on the right side of the market maker sell model, and that high right there should never be touched again until you go and finish this model, right? The best case scenario would be if you don't take out any highs from now on. You see what I'm saying? You can still, I'm not saying you can't come back up and take out this high, but the best case scenario is if you don't take out these highs, that's showing you that it's exceedingly bearish, right? Because it's starting to protect the highs. But that high at the smart money reversal should never be touched again.
Okay, cool. I got it.
All right. So that's why we have been looking for reasons to sell, right? Ever since this point right here. We've only been looking for reasons to sell. We haven't been talking about buying anything, right? Unless you're just sitting on the sidelines waiting for price to give you a reason to start buying again. And now that we see how the chart looks when we first started talking about selling over here, right? We see how the chart looked back then when we first started talking about that. And now we're going to put the meat back on the bone, right? We're going to put the meat back on the bone and show that this is where we are now, right? This is where we are now in price. Now, you see, and you say, hey, Tim, right? This stuff really does work, right? Because anybody that was here back then, you know that we was talking about price retracing back down, and this right here was our initial target. Well, Tim, it went a whole lot farther than that. I'm glad you said that, right? This is where the other stuff come into play, right? This right here, right, was our initial target. Whenever you have your initial target, and in this case, any PD array, what's the first thing you want to figure out if price would do once it gets there? What's the first thing you want to know? Once price gets here, what's the first thing you want to figure out? Even before the rejection, right? What you want to know when price gets there, what's the first thing you want to know? I ain't got nothing.
Can it go beyond?
How far can it go? That's the first thing you want to know. How far can it go beyond the spot that I'm looking at, right? And that's when you want to have your PD arrays. Y'all shout out Deborah, man. I already know Sherwin told her that because she took too long to respond. She ran over there in the den and said, babe, what is he asking? Right? So we want to know how far can price go once it gets to the place that I'm looking at, right? And at any time you have any PD array, right? If you have a PD array here, right? What are you looking for in this case below it, right? What are you looking for below it? And in the case other way above it, right? What's the first thing you're looking for? With any PD array, what do you want to look for first? What are you trying to identify if it's below it or not? What's below it? What's the first thing you're trying to figure out? Is there a what? Right? Is there a what? Right? When price comes to this PD array that I've chosen,
Higher time frame?
is there a higher time frame PD array that's resting below it or above it? Right? Shout out D, shout out Jennifer, shout out Here to Learn and Share. Right? Jennifer, Here to Learn and Share. I don't know how fast that you put that in that chat, but I don't know if y'all was cheating off D paper just then. It feel like y'all was cheating off D paper just now. I ain't saying you did. I ain't saying you did, but it just kind of feel like you was like it felt like you. It felt like you peaked. It felt like you peaked. Okay, so you want to identify are there any higher time frame PD arrays resting above or below where I anticipate price to go to? It wasn't already in the chat. I saw it move. It wasn't already in the chat, right? So, looking at price here, right? What is this down there that we have marked out right there? Can y'all see what that say? Let me make the letters bigger for you. Right? Can y'all see what that say over there? And put it in the middle. Right? Can y'all see what it say? That says it's a weekly bullish fair value gap. Right? That's a weekly bullish fair value gap. Now it's not inversion fair value gap, it's a regular fair value gap. Let's go up to a weekly time frame. Man, the Fed's watching. My trading view done froze. The Feds don't like this. The Feds don't like this. Man, why my trading view froze? Anybody got anything? Is there added confluence for that area being a high probability because it is CPI? I don't care nothing about no news wicks and all. I don't care nothing about none of that. I don't care nothing about none of that. I don't care. You have people that talk about news wicks and what the algorithm use the news for is to drive it to a place where it wants to go faster. Right? Drive it to a place where it wants to go to faster. That's the only thing I look for as far as with the news. But it like I don't look at it as it makes it higher probability because it's the news. Matter of fact, when it comes to news wicks, I typically ignore them because that's not real price action. That's just the algorithm moving somewhere really fast to go accomplish something, which typically is like taking somebody out the game. Because you'll notice that the algorithm, a lot of times on the news, it wipes the board clean on both sides. It hits buy side, sell side real quick. Boop, boop. Take everybody out the game. Wipe them out the game. Right. Why can't I see my Discord chat right now? Oh. We might be done, y'all. We might be done. Okay, there we go. We back. Okay, so this is the daily chart, weekly chart. Man, every time I try to go to the weekend, I'm about to get pissed off now. Oh yeah, they don't want us doing this, huh? All right, here we go. Weekly chart, right? So looking at the weekly chart, right? If we come to the weekly chart, remember what we talked about? What them things we call dealing ranges, right? Remember them things we call dealing ranges? Okay, so looking at our weekly chart, all right, if we come all the way down to the lowest low that you can find, right, to the highest high, right, you have this dealing range on the weekly time frame. Right? This is the lowest low to the highest high. Right? That's our dealing range there. On the old contract, we actually took that low out. Right? So that's why we said that was our dealing range. On the old contract, we actually took that low out. On this contract, the prices are a little bit different, so we're not below that low. But on the old contract, we actually took that price out, and this was the dealing range we were watching, right? So this dealing range, right, is broke down into several price legs, right? We got that price leg there, and we got this price leg here, right? So we got 1, 2, 3, right? Different price legs in this entire dealing range right there, right? So now we're looking at, we have buy side delivery, sell side delivery, buy side delivery, right? And so we can look at this area right here, right, as a balanced price range, right? Can somebody tell me why we could look at this area here as a balanced price range? Right? And it has something to do with this week right here. I'm listening and watching. I'm looking at the chat this time. Cheater, pumpkin eater. Price expanded away from it. Very good. Very good, Kashaya. Right. Very good, Shonister. We offered buy side delivery. We offered sell side delivery, right? And then price left. Once price leaves that area right there, offering buy side and sell side, that makes this efficiently delivered. Once we leave the area right there, now that confirms that this is a balanced price range. Okay? Now that we've confirmed that that's a balanced price range, right? We don't want to see price digging back down in here, right? So since we don't want to see price digging back down in here, at the current time, we only want to focus on the range where we left. That's the lowest low right there, 48.50, right? That's the lowest low there, right? We only want to focus on the area where we left the balanced price range, right? And so this is the lowest low. We can, if you want to, you can focus on this low if you prefer, right? Because this is the candle that's leaving, right? And this is like a confirmation move, right? So I'm going to the parent, right? This is the parent move down here, right? This is the confirmation move. Okay, so either one you want to pick, right? Air in close proximity, right? But this fair value gap right there, which comprised of two volume imbalances on the top and the bottom, right? That fair value gap is where? In this price leg. That's your high, that's your low. Where is that fair value gap right there? Compared to this fair value gap right here. Who said that? I heard somebody say discount, but you whispered it. Say it with your chest.
In a discount?
In a discount. Thomas over there whispering. This fair value.
My mic was on.
This fair value gap right here is in a discount of this price range right there, right? Where do we want to buy? We want to buy in a discount, right? So on the weekly time frame, right, we're anticipating a retracement, right? If we're anticipating a retracement, we're not looking to buy in the premium, right? This is in the premium of this move right here. That fair value gap is in the premium of this move. This fair value gap is in the discount of the move. Okay, so there's your imbalance on the weekly time frame that's in the discount of this move, right? that right there becomes your weekly anticipatory reactionary point. You're anticipating price to come back to, why are we expecting it to come back to that imbalance? Because price seeks what? It seeks liquidity and seeks liquidity
Imbalances.
and imbalances, right? Price seeks liquidity and imbalances. So there's your weekly liquidity imbalance on your weekly, that's the imbalance on your weekly time frame, right? We come back up, right? Remember, we were saying this right here was our initial target for our market maker sell model. That was our initial target, right? We're getting to how far can it go, right? So now with this initial target right here for our market maker sell model that we was looking at on the lower time frame, right? Where is that initial target in the sense of our higher time frame range, right? Where is that initial target? Is it in the premium or the discount of our higher time frame range that we're watching? Is it in the premium or discount? Premium. Very good. I'll give it up for Shonister. It's in the premium, right? So if it's in the premium, right, do we want to buy in a premium? No, we don't want to buy in a premium, right? We want to buy in a discount. So if this is your initial target, right, and it's in the premium of a higher time frame move, and you have a higher time frame discount PD array resting below your initial target, right, then you expect price to draw to the higher time frame PD array, right? So when price comes to your target, now you can anticipate it going to the higher time frame PD array. Okay, so now when price hits there, right, you're not anticipating a reversal here, right? Any move back up when price gets here, you're looking to sell that because you have a higher time frame PD array that's resting below you, right? Remember that. That's key, right? Let's drop down to a lower time frame. I'm just going to go all the way down to 15 minutes. Right? Tim, why are you jumping straight to 15 minutes? Right? Because, right, somebody had mentioned something about like news, right? Mentioned something about news. I think they asked about like CPI or something like that. And it's high impact news. Do anybody remember what this day was right here? This huge drop right there. Do anybody remember what that huge drop was right there?
FOMC.
FOMC. Right? What did I just say the market does with news? Remember, one of those, if you don't remember, go back later in the video and look at when I typed out all this stuff and I said quad witch, I said FOMC, I said CPI, I said GDP. Remember I typed all that in the beginning and I said these are high impact news events, right? I said these high impact news events, and I said I could care less what they say in any of those, right? I said I could care less what they say in any of those, and I said that the algorithm uses high impact news, right, as a catalyst, if you will. It uses it, shout out Shonister, shout out Here to Learn and Share, it uses it to get it where it want price to go faster, right? This is our initial target right there, right? That's our initial target. So when the FOMC came out, the algorithm pushed it immediately to our initial target, right? Now, if you're not in the mindset of this is my initial target, but we have a higher time frame PD array below us, right? Once price gets here and starts to do this, you could get trapped into thinking, oh, we're gonna fade FOMC. We're gonna go back all the way up here to there. Right? You're gonna fall victim. Why? Because you don't realize that there's a higher time frame PD array resting below you. So now that you know there's a higher time frame PD array below me, and the market has shown me that it wants to go down, it has shown me that, right? So now that it has shown me that, right, can somebody tell me why this just melted down like this, like it was cutting through butter? Why did it do that? Can somebody explain that to me? Can somebody explain that to me? And I'll go back to the daily chart, right, so you can see it a little bit better. Can somebody explain that to me?
Because it was going down through the price range.
I put it on the daily chart so you can see it. Right? Remember, you always want to remember what your higher time frame doing, right? So this is a 15-minute chart, and I'm giving you a clue. Why did this just melt down like it was cutting through hot butter? Why did it just do that? Let's put it on the daily chart so you can see it better. I just repeated the question. On that 15-minute time frame right there, why did, during FOMC, right, why did the market just start to spool down and just cut through price like it was cutting through hot butter with a sharp knife? Why did it do that? And I'm giving you a clue by saying that.
Because the draw was below price.
Listen to the clue. It's cutting through this area like hot butter. Now, when I put it on the daily time frame, why did it do that? It cut through
Low
price.
resistance.
It cut through price like hot butter. It cut through price like hot. Balanced price range, Thomas. Thank you. Thank you. We have buy side and sell side here, and we left that area. When you, with a balanced price range, if you're above it and you're bullish, you want to see price do what? You want to see it do what to price, right? You want to see price be supported by it. If you're above a balanced price range and you're bearish, what do you want price to do? Say it for me. Say it for me. Say it for me.
You
I see
want
you.
price to cut through like hot butter.
You want it to cut through it like hot butter. Right? Signatures. We're looking for algorithmic signatures. We don't fear these algorithmic signatures. So now that we know we had a balanced price range on the daily, we got our smart money reversal, we got our low risk sale, right? And then when price came over here, right, in front of FOMC, we were not taking part of this because we couldn't get positions here right in front of FOMC, and it just pushed all the way down to that target right there. When we start getting us a retrace back, right, we're not looking for price to go up, right? Where are we now, right? If I'm going to do this right here. I'm going to draw this out like this, right? I'm going to draw that out like that, and I'm going to go back to the daily chart, and I'm going to spread it out. Where are we now, right? When price came down here, where is price now? Once we got this huge drop, remember we was below there, right there. Where are we now? Huh? Right here, when price is right there. Let me take these off because it's hard for people to see. Right? At that point right there, where are we now? In reference to the balanced price range, the BPR. Where are we now? We're below the balanced price range, right? We're below the balanced price range. And if you are bearish and you are below a balanced price range, what do you want that balanced price range to act as? Resistance, right? So if we get any type of movement back up to that balanced price range, right? You want to see this balanced price range act as resistance. Who remembers when I had something on my chart that looks like this? I think it was yesterday. Right? Was that yesterday? I think it was. Yes, it was yesterday. When I had to leave. Remember when I had to leave early and I had something on my chart right there that looked like that? Right? Can y'all confirm for me? Is that like I had it on my chart, right? Yes, yesterday. Right?
Yep.
I got that on my chart right there because, right, price came up, made a high there, came down, made a low there, came up, made a high there, came down, made a low there, right? That right there, these two down close candles right there, right? That right there is a bearish breaker. This right here is a balanced price range. Why? Because we offered buy side and sell side and then we left it, right? That's a balanced price range. Since we're anticipating a retracement back into the discount, right? We want to see price cut through it like butter. Price cut through it like butter. Now we're on the bottom side of that balanced price range. Now we want to see price resist. We want to see this balanced price resist price. Why? Because we want to come down into the discount. We want to draw into this higher time frame weekly imbalance because we've already reached our initial target and it did it without us. But we want to participate. So now we want to see price come back up. We don't want to try to sell when it breaks out below this low. We're selling too cheap. We want to go up and sell when it gets more expensive. How far up do we want to look? I want to see price be resisted here. Why? Because I don't want to see price come back through this balanced price range. The algorithm has shown me this is a balanced price range when it left it. Then it showed me it was bearish because it cut through it like butter. It didn't try to use it as support. And if it's bearish, it got to be going somewhere. And I refuse to believe that it's just going to come right here and just stop. Why? Because there's a fair value gap in the discount. There's a fair value gap in the discount. Right? So if price starts to trade back up, I want to see the sensitivity in the wick of this breaker. Why is that? Because there's no imbalances over here for it to trade back up to. There's no imbalances over there. Right? You do have one way up here, but where's that? On the top side of the balanced price range. So I want to see the sensitivity right there. That's why I had that on my chart. Right? That's why I had that on my chart yesterday. Right? So I'm here by myself. I shouldn't hear no doors moving. I shouldn't be hearing no doors moving. Talk about. So, right? So as price comes back up, we're looking for sensitivity there to give us a reason to sell back down into the discount, looking for that weekly fair value gap, right? And if we put the meat back on the bone, right, on the daily chart, you see that this day opened up and went right up to the top, to the closing price of that order block right there, right? And if we drop back down to 15-minute candles, right, we can see the proof of the pudding there, right? And yesterday, what did we say yesterday was? What did we call yesterday? Oh man, where did it go? Did I close it?
A nothing burger.
A nothing burger. Got to a nothing burger, right? Yesterday was a nothing burger, right? Why? Because we had a large range day the day before, right? So yesterday morning, we weren't anticipating trying to jump in and do a whole lot. We was looking for people to get their head bust to the white meat, right? Why? Remember, we're during, right? It's during quad witch, right? You're gonna have a lot of back and forth, right? A lot of in and out, get in positions, out positions, right? A lot of in and out, back and forth, right? So you see the morning time, right? From, get over here, right here. This is the morning session here, right? This is from 12 and this back over here to 9:30, right? Look at this. Horrible, right? And then this is the afternoon. More fluid, right? More fluid price moves, right? So after a large range day, anticipating a nothing burger, right? Throughout the Asian, London, and New York, right? Got a bunch of back and forth, take your money. Then New York evening, we got more of a fluid move. But if we look, even during this high resistance, like I always say, you cannot stop the algorithm from being the algorithm, because where did price go? Up there to that breaker that was responsible for stopping price from coming back up through that balanced price range that price had just cut through like butter. Right back there to that sensitive wick of that breaker, and as you see there, went right up to the high of it, maybe like one tick above, right? 21,696 and 3/4. The high on that candle right there is 29,697 and 3/4. So 1 point above the high of that wick, and that traded up into a 15-minute bearish fair value gap right there, right? So on the 15-minute, you can say, hey, I'm trading a bearish fair value gap. On the daily, you can say, hey, I'm trading a daily breaker. Pick your PDub of choice, right? But the thing of is understanding why is price coming there and why it should stop and go this way. That's what's more important than what PDub are you using to enter. Why should price come here? Why should it stop? And why should it go there? Okay. Now that we see that we have come to our weekly anticipatory reactionary point, right? What do we say when price is coming to our ARP? What's the first thing we want to know? What's the first thing we want to know when price is coming into our ARP?
How far can it go?
How far can it go? Right? And then let me blow these up for you. Double click there. Make that big there. Double click there. Make that big there. All right. So, looking at this here, you know what PMH mean? Do anybody know what PMH mean? Prior month high, right? Anybody know what PWL mean? Prior week low, right? In the case of how I use prior and previous, right? if you ever hear me say prior, it's just back, it's just before. If you hear me say previous, that means like the one right after it, right? So in the case of, let's go to the monthly, right? Let's go to the monthly here, right? So looking at the monthly right here, see, we're in the month of December, right? This is the month of November, and this is the month of October, right? I got a prior monthly high. This is the previous month. That's the one right before it, right? That's the previous month. That's just how I make it make sense in my mind. You don't have to do it like that. There's nothing wrong with, you know what I'm saying prior, previous, or whatever, but that's just how I make it make sense in my mind, right? So we got a prior month high right there, right? Old highs and lows are PD arrays, right? Old highs and lows are PD arrays. So that's a prior month high, right? A monthly high is higher than a weekly fair value gap right there, right? So the monthly high, I'm anticipating price to want to draw to the higher time frame PD array. Okay. There's a weekly low right here, right? Since there's a weekly low there, I'm keeping my eye on that. Why? Because what rests below lows? Sell side liquidity, right? Am I trying to force that low right there? No, I'm not. I just want to be aware that it's there. I'm looking for it to come here. Why? Because it's a higher time frame PD array that's resting below my anticipatory reactionary point. And that's why that prior month high and that prior week low is on my chart, right? And if you wonder what that purple thing is, that's a new week opening gap down there, right? If price just gets stupid heavy, right? But this is where I'm looking for it to come because it's a higher time frame PD array. And if we look at where price is right now, right? We came down to, get out of here, lines. If we look at where price is now, look at the beauty of this. We came down to that prior month high. Look at the bodies of the candles respecting that, right? Came down to that prior month high, right? Once we hit that prior month high, right? We came back up, right? Created an inversion fair value gap right there, a BISI right there, and look what it's lining up with. All of that is lining up with a new day opening gap from November 29th, right? A new day lining up beautifully with that BISI, the high of that BISI is lining up beautifully with that new day opening gap, and this is the inversion fair value gap right here. And then price traded down into that inversion fair value gap right there. Institutional order flow entry drill on that inversion fair value gap right there at 8:15, and then displaced away, right? Once it displaced away, price then came back here at the 9:30 open, right? No, it's 9:45. So the 9:30 open, look at this. You can see it on the one. You can see it on these candles here. On a low, somebody tell me on a lower time frame, right? What happened right here? This is the 9:30 candle, right? Price went up, took out that buy side, then it immediately turned around and took out this sell side right here. On a lower time frame, what just happened right there? What signature is that? What do we call that over here in the gang? And you'll have to be on a lower time frame to see it.
The wig snatcher?
The wig snatcher, right? So I'm going to box this out right here, right? I'm going to box this out right there. And then we're going to go into a 1 minute time frame, right? This 15 minutes here. We're going to drop down to a 1 minute chart and look at that highlighted area right there. Does that not look like the snatcher of the wigs? Displacement up, take out low, give you opportunity to get long. Does that not look like the wig snatcher? Does that not look like the wig snatcher? And then the rest is history, man. I'm kind of tired of talking. Right? And I think we covered a lot on this Don't Force It Friday. Right? We covered a lot on this Don't Force It Friday. Okay? Hopefully I didn't lose anybody. All right? Hopefully I didn't lose anybody. Hopefully you see it clear. Right? Shout out to everybody that's going to be participating in the boot camp. Right? Shout out to everybody that's going to be participating in the boot camp. It's 10 slots left in the boot camp. We're gonna cover all the material, and we're gonna have something going on every day in January, Monday through Friday, unless it's a holiday or if I got stuff going on with my family. Y'all know family come first. Right? Y'all know family come first. But Monday through Friday, we're going to be doing some phase 1. We're going to go through the educational material. Phase 2 is going to start the tape reading. Phase 3, we're going to move into, we're going to build entry models for people who can't build their own. Like if you don't know how to build an entry model that resonates with your trade identity, we're going to work together and build that for you. Phase 4, move into the scheduling the one-on-ones to go after the boot camp is over. And then if you're not a member of the gang, you know what I'm saying, you get to stay in the Discord with us up until the end of July, 6 months after the boot camp ends. Okay? Link is pinned to the top. If you want to participate, top of the chat. If you want to participate, gang, you get 75% off. If you're not in the gang, the sale is over. Gang, your 75% off is good until Christmas. After Christmas, from Christmas through the 31st, it'll be $1,000 for everybody. It's only 10 slots left. If those 10 slots go, they're gone. If those 10 slots don't go, it ain't gonna be on sale after December 31st. It's just going to be what it is in the boot camp. The less people, the better. That's the less one-on-ones I got to do. You know what I'm saying? There's less one-on-ones I got to do. I already got to do 10 hours of one-on-ones as it is. Right? So, do anybody got anything for me before I go? Since we did this right here and we walked back through price all the way back to whenever, we're not going to do a price action recap tonight. I feel like this enough little Timmy Rogers for the day. So we're not going to do a price action recap tonight. So if you got anything, ask now. Next week is going to be Christmas week. I'm taking the week off. I'm not going to do any trading next week. So I probably will not do any videos. I probably won't do any live streams because I'm not doing any trading next week. Today is the 20th, and then next week is Christmas week. And my kids are going to be out of school. I think my wife took the week off. I'm not sure, but holidays, man, family time. I ain't gonna be doing no trading next week. I don't see nothing in the chat. What's going on, Stock Chaser? I ain't seen Stock Chaser in a month of Sundays, man. This was a masterclass, Tim. Lots of gems. I appreciate that. I don't try to drop gems. I just share my thoughts on how I understand price action. I appreciate that, Seawalk. Here to learn and share. You're welcome, Jennifer. All right. I don't see nothing in the chat. I appreciate y'all for hanging out with me. Hey, if you pulled up on the talk of the ticks, I appreciate you for pulling up on the talk of the ticks. For some reason, StreamYard, it lets me stream live on the talk of the ticks. So I'll be streaming live on the talk of the ticks. If you got something out of this, do we get lifetime access to the boot? Yes. The way the boot camp videos are gonna be, Throwback Gang, remember this, right? They're gonna be recorded to private YouTube videos, right? The only way you can access or look at these videos is you have to have your YouTube email address. I got to have it. So that's going to be something that I do before we start the boot camp, right? Before we start the boot camp, I'm going to put out to all the members, send me your YouTube email address. That's the only way you will be able to look at these videos, right? That's the only way you'll be able to look at these videos. You send me your YouTube email address, because it's going to be in a private video. It's not going to be unlisted. It's going to be private, right? And what that does is, if you're not logged in as that person whose email address that's linked to the YouTube channel that you give me, you can't look at the video, right? So you got to be logged in as that person to look at the video. And as long as YouTube is there, you will be able to look at those videos, right? That's how it works. And then, I don't know how long the internet gonna be around. If you wanna figure out how to download them or save them or record them or whatever from YouTube, you can explore those options. But long as YouTube there, the videos will be there. And then as far as the what's the name? Non-Spotted Gang members, right? Access to the Discord ends at the end of July for the boot camp people. But it's only one person that I know of now that's outside of the Spotted Gang that signed up for the boot camp. It's only one. Everybody else that has signed up is a part of the gang. And then one person in the gang got gifted a slot because another person won, and she said, hey, I want to gift my prize to whoever, without even knowing what the prize was, gifted it to another gang member, right? So there's 10 slots available for purchase, but it's like 11, 12. It's like 12 people in there. 12 people, because my brother in there, the one that got gifted, and then 10 other people. Yeah, so it's like 12 people in there right now, but it's 10 slots still open. 9 slots available. What, did somebody just buy one? 80, did you just buy one? 80, did 80 just buy one? 80 said it's 9 slots. Let's go see if 80 just bought one. That's going to be funny. If 80 just bought one, that's going to be hilarious. 80 just bought one. 80 just bought one. That's hilarious. Yeah. Somebody just bought a slot. 80, was that you? Was that you that just bought it? He said, yo. Shout out 80. Shout out 80. Shout out 80. Hey, if you are in the, matter of fact, I'll do it right now while I'm talking, but I'm going to redo it inside the Discord. But if you are in the boot camp, meaning you're in the diamond tier in the Discord, if you're in the diamond tier, let me go here. Let me share my screen. All right. No, that ain't what I want to do. Members. All right. Diamond. Okay. So, Wells J Rock, G Ferg, G Ferg. I think it's the only person that's not a gang member that joined. All right. Yeah. See, it's a bot invite, and then everybody else got links in there. So Wells J Rock, G Ferg, Shonister, Jada, Jim, Jermaine, JJ, Marco, Shawnee, Calio, Seawalk, Derek, Lump. All of y'all send me your YouTube email address in the Discord. Lump, I already got yours. Lump. I probably got some of y'all's too, but I don't feel like going back and looking through old DMs and stuff. But send me your YouTube email address in direct message. Don't dox yourself and put it all out in a chat somewhere. Right? Jeep. Hold on. Who is that? I just saw somebody said something. Oh, they said that's me. Oh, what's up, man? What's going on, G Ferg? Shout out G Ferg, man. G Ferg pulled up. G Ferg pulled up like throwback a long time ago. I think G Ferg might have been the first person that copped the the boot camp. G Ferg pulled up a long time ago. Shout out G Ferg, man. Y'all show G Ferg some love, man. Y'all show G Ferg some love. Shout out G Ferg. Where my Discord at so I can... Oh, there it is over there. Y'all show G Ferg some love, man. All right, so I need y'all to send me your YouTube email. Like, whatever email is connected to your YouTube channel that you're watching with right now, whatever email is connected to that YouTube channel, DM me that, right? That's how you're going to be able to rewatch these. That's how you're going to be able to access the boot camp live streams. Now we're going to be like we always do. We be inside. We're going to be inside the Diamond voice chat, right? We're going to be in there so we can talk to each other, but you'll be able to watch it on YouTube and rewatch it on YouTube. But we're going to be inside the Diamond voice chat so that we can talk. You can unmute and talk to me, right? So yeah, y'all start sending me them emails. This the list of people right there that's in there. If you're watching it later and you're not on here now, you hear me saying this, and then I'm also going to send out a matter of fact, I'm going to do that right now. Let's go to the Diamond chat. Hey everyone. Thank you, Jim. Hey everyone. Please DM me your YouTube email address. The one that is connected to the YouTube channel that you watch my videos with, right? Because a lot of people try to send me they business email and be like, hey, Tim, I can't see the video. Be like, Tim, I can't see the video because you sent me your business email. You didn't send me your YouTube email. Hey, man, I appreciate y'all for hanging out with me. You know what I'm saying? I appreciate y'all for hanging out with me. Gang, y'all know what it is. We do the same thing every day. All right, we do the same thing every day. We talk about the same stuff over and over and over. Repetition is the mother of skill. Right? Repetition is the mother of skill. Right? You want to get it, you want it to be second nature. Right? That's why I call it the boot camp. Cause it's like just like when I was in the army, they drill it in your head over and over and over and over and over, so you just react. You just react, second nature. You ain't got time to worry about, oh, he bleed and she bleed and oh, well, what's going on? You just react. It's second nature. You react. You act off instinct. That's how you want to be when you're looking at these candles. Hey, man, I appreciate y'all for hanging out with your boy. It's been a ball. If you got something out of this, hey, share it with a friend, man. Be like, hey, man, little Timmy Rogers put on a masterclass today. Pull up and check this out. All right? Hit the like button if you like it. I hit the wrong button just then. You know what I'm saying? Share it if you liked it. And with that, I'm going to call it. It's 11 o'clock. We've been on here forever. All right? The market said nothing can stop me. I'm all the way up. Look at it. It done went all the way back up to that breaker. Y'all see that? It done traded all the way back up to that breaker. Nothing can stop me. I'm all the way up today. Right? And what did it bounce off of? Ooh, that prior month high right there. Ooh, how did it do that? Ooh, I wonder why I did that. You know why I did that? Because this stuff worked. This stuff worked. Somebody on Algo's internet charged you $19.95 for this. And we just went through this whole thing for the frisky whiskey. Hey, man, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just a big old spider. If you don't hablo español. I don't know when the next time y'all gonna see me. Cause I ain't doing no video tonight. Cause we did this. And then I'm taking next week off to be with my family. You know? Gang, y'all know how I do. I might do a pop-up, but for real, I think I'm just gonna be chilling with my family. Y'all enjoy y'all family, man. Do me a favor. Not just cause it's the holiday season. Right? Not because it's the holiday season. Do me a favor. Let your loved ones know that you love them. Right? Do it right now. As soon as you get off this live. Right? As soon as you get off this live, I want you to call your spouse, walk in the next room, talk to your spouse, text your kids, call your kids. If your mother and father still blessed enough to be with us, call your mother and father, let them know that you love them. Nobody is promised tomorrow, man. Nobody's promised tomorrow. Take advantage of the day while you can. Don't just say it. Don't just show it. Say it, show it, and confirm it. Right? Open up the lines of communication so that you will understand their love language and they'll understand your love language, so you can speak in one another's love language so that you can see and receive the love that they're trying to give you, and vice versa. If your loved ones' love language is words of affirmation, don't go buy them a PS5. It's going to look at you like, what I need that for? Give them words of affirmation. If their love language is physical touch, don't just shower them with words of affirmation. Give them a foot massage. Give them a hug. Right? Speak in their love language so that they can see the love that you're trying to give them, and vice versa. Right? Take advantage of the day, man. Take advantage of the day. We're not promised tomorrow, right? We're not promised tomorrow. Hey, man, I appreciate y'all for hanging out with me. If I don't see y'all until the new year, y'all be safe out here in these trading streets, man. Gone. Yeah.